Hey, what's up everyone? In this short video, I wanted to give an example of how I use the trail stop method to manage my positions. I really prefer the trail stop because it leaves less room for subjectivity in the trade. There's specific points at which you tighten your stop, and it's at the point that the market takes you out that the position is over. So it's the market telling you when it's ready to change direction. So for that reason, I like to use trail stops quite a bit, both on swing trading stocks and intraday futures trading. So down here we have a long setup, a breakout long above the high of this low bar. And once the market breaks new highs of the prior bar by at least 2 ticks, I'll go ahead and move my stop from the initial stop, which is below the low of that signal bar. I'll just move it above the low of each prior bar. So once this candle breaks highs by 2 ticks, I can then go ahead and move my stop from under the low of the initial bar to the low of the prior bar. And I'll just put it under the low by 1 tick. I'll use an entry 1 tick above the high, and I'll use a stop placement 1 tick below the low. And then trailing my stop 1 tick below the low of each candle for long setups. So as we begin to move higher, we can continue trailing our stop. Now, this specific candle only broke highs by 1 tick, so I would just leave my stop below the low of the prior bar. Doesn't really make a difference in this case, but at times I found that when we only break the highs or lows by 1 tick, you're just better off leaving your initial stop where it is in its position as you're trailing. So move the stop underneath the low. Now we break highs by 2 ticks. Go ahead and move the stop underneath the low of that bar. Again, we had a little double top formation, but that didn't really matter. We kind of consolidated a little bit and then broke out once again. So it's just a matter of continuing to trail your stop every time we break highs by at least 2 ticks. And at some point, the market's going to turn, as it did here, and keeping our stop underneath the low, this bar ended up being, temporarily anyways, the high bar in the trend, and so we got taken out here at 36.75s as the market began to roll over and move back lower. So 33.75s to 36.75s, trailing our stop allows for a lot of that subjectivity to be taken out, and it's just a very objective way to manage the trade. So I hope you found that trail stop video helpful, and look forward for more videos coming soon. Thanks again.